Hi, Zach Bassett with COS Accounting and Tax here, doing another video for my Compounding Interests blog. Today we're going to talk about credit card cash advances. A lot of people don't really know anything about this, but it's something I've used to enable myself to start businesses or come up with cash when I had nothing. So let's say you know Bitcoin is going to go from 10,000 to 20,000 in the next month. You know it. You want cash, you want to make that money, but you don't have any coming. Maybe you know later on in the year you're going to get a back end or whatever it might be, but you can't quite come up with the chunk of money that you need to invest in something or start that business that you want to start. Consider this very strongly. I would personally do it every year to the max no matter what, because why not have an additional $40,000 to $200,000 working for you each year compared to not having that money. So a credit card cash advance, you need to first off be able to get them. So you're going to start off by applying for each credit card that you can. I highly recommend the Bank of America cash advance card. There's several different ones, so you want to make sure you get the right one. Cash rewards are always the best. Travel rewards are a waste in my opinion. When you can get cash rewards, it's just a lot easier to use and better overall. So Bank of America cash rewards, and then another good one is the Chase cash rewards. So you apply for those and you start building your credit. Well, each year they're going to send you, they want to entice you to have a balance that's full, right? They don't, if you don't ever use your cards, they're not making any money off of it. So the first thing they're going to do is send out these cash advance checks. So you'll get a check, you'll get a blank check in the mail, and all you have to do is take that to the bank and write it to yourself. A lot of people don't know how to do this part. It's easy. Write it to yourself, sign the back, and then deposit it into your bank account. So at first they might be $500 max. So you do the 500, you get the $500, you're going to pay 3% on your balance transfer. But then you have 0% interest for the year. So you're going to pay $150 on $5,000. So let's say you get $5,000, you pay $150 on $5,000. So what does that mean? If it's 0% interest after that, 0% interest for 1 year. If it's 0% interest for 1 year, that means that you have got to make more than $150 over the course of that year. That's 3%. If you can't make 3%, if you can't make more than that, just give up on business now. No, I'm kidding. But if you can't make more than 3%, then you probably did some too risky of things. You can easily get into some investments where you're going to average 8% a year, year in and year out. You might have 1 in 10 years where you actually lose 8%. So do your best on that investment side of things. But the main idea is that now you've got $5,000 just from one credit card to do what you want to do with. And then, just after the first year, you're going to want to make sure to pay it off. So you want to do a 1-year investment. Well, you got to think about it. What if I can't pay it off in time and it's a 9% interest at that point? At that point, you need to just be making more than 9%. So let's say you put it into your business and allows you to make 300% year over year, then you're going to be fine with paying that 9%, right? So who cares that you're paying 9% when you're instantly making much more? Like through my promissory note fund that I do for people, if you've got 10 grand and you want to put it in with me, I'll pay you 16% interest on that 10,000 every year for 5 years. It's a 5-year note. At the end of the 5 years, you get your $10,000. So you just about double your money over 5 years. and there's zero risk other than if my company, Mason, if me and Mason both go bankrupt and all of our companies go bankrupt, then that's the only risk, which we're growing at 1,200% growth. That's why we need the promissory note funds. We can't get enough cash from the banks. So super easy way. Say you get, $20,000 total from these cash advances. You put it into our 5-year fund, and you've got, it costs you $600 at first to get it. And then each year after that, it costs you $1,800. So we've got 4 years at $1,800, which is 32 plus 4, 7,200. Yeah. So 7,200 plus 600 is 7,800. So you got to make more than $7,800 or you're losing money, right? So with us, you're going to make 18%. So 16%. So you're going to make $3,200 a year. And you get that in mandatory dividends. You can't roll your dividends over. So you get $3,200 total each year through 4 separate $800 quarterly dividends. So now you got $3,200 a year times 5. So you've got $15,000, $16,000. So you have $16,000 that you've made, plus you get your $20,000 back. So now you've got $36,000 at the end of the 5 years. Whereas you paid $7,800 on the credit card advances. So your difference is the $16,000 to the $7,800. So you made $8,200 in, $8,200 is what you made on that. Just because you spent an hour doing some cash advances. So awesome way to do it, especially when you take into account the the next to zero risk promissory note. We're only doing a certain amount of those, so at some point we'll cut people off on that. But yeah, super good way to just make extra money. If you've got the right type of investment, I wouldn't recommend doing this if you're planning on investing in a blackjack, business where you're going to start gambling. You need to be safe. You need to make sure that it's something that you're pretty darn sure of, or you can handle losing the money if you end up losing it. So you don't want to be doing this with it being your life on the line, right? So every year I do this to the maximum. At first it was 10 grand I was able to get, and then it was 30, and then it was 60, and then over 100. And my goal is to continue pushing the companies as far as they will let me go, to where I'm getting $1 million in cash advances each year, and then I pay them off the following year. Because if I'm making, 20% on that, I'm making $200,000, otherwise wouldn't have made. So when you think about the compounding interest behind that, it becomes insane how much money that's going to make me in difference between doing it and not doing it. So hopefully that helps. It's really, really easy to get going. You can look it up, Google it, find out exactly what you need to do, but it's as easy as applying for the card, then it comes, then you fill the stuff out. It's pretty easy.